In today's video, we'll talk about the enormous impact of the change in the accounting treatment and the accounting standards on the valuation of cryptocurrency from my point of view as a certified public accountant. And in my view, these changes that are coming to the accounting standards will likely create a wave of adoption by companies of cryptocurrency as a way to transact and store value. And this will lead to a high demand for the asset. And due to the finite nature of the blockchain, this can lead to an enormous appreciation of cryptocurrency valuation going forward. So in today's video, we'll start by looking at the current accounting treatment of cryptocurrency. Then we'll highlight the problems this treatment poses for companies like Tesla and Square and many other companies. And then we'll take a look at the comments made by Cassie Wood of ARK Invest, whom I respect tremendously for her early bullish call on Tesla and what she thinks of cryptocurrency and the accounting standards, and whom I agree with on the topic. Finally, we'll discuss the possible FASB discussions happening as soon as early December 2021 and their possible impact on the valuation of cryptocurrency. So if you're a cryptocurrency investor or work in finance in general, you're gonna love this video, so let's jump right into it. And if you're new to this channel, welcome. And if you're not, welcome back. My name is Bill Hanna. I'm the financial controller. I'm a licensed CPA in the great state of New York. And I've been working in accounting for the last decade and a half. And this channel is all about giving you my experience over the last decade and a half working in accounting. I do this here in the YouTube channel and on my website via online courses and blog posts. So go ahead and check that out as well. And let me just be clear, this is not an investment advice. I'm not a licensed investment advisor. This is just my humble opinion as an individual with an accounting background. And so as the activity in the blockchain and the digital asset industry continues to grow by multiples each year, companies are pushing for definitive rules around accounting for Bitcoin and other cryptocurrency assets. Companies like Walmart, Amazon, and Apple all posted job listings on positions such as cryptocurrency lead, digital currency and blockchain product lead. Facebook is inching closer to the release of Diem, their own digital currency. They recently announced that their wallet, Nuvi, has secured money transmission licenses in nearly every state, and this is just ready to launch. Now, the accounting standards and regulations in the United States, or US GAAP, generally accepted accounting principles, are set by two regulatory bodies, the FASB, or the Financial Accounting Standards Board, and the SEC, the Securities and Exchange Commission. So in summary, the FASB will create all the accounting standards and rules that bean counters, such as myself, will have to adhere to. So now let's take a look at the current accounting treatment of cryptocurrency so we can understand the story a little better. So currently in 2021, the accounting treatment under US GAAP for cryptocurrency, there are no specific rules to address the accounting for cryptocurrency. So there is a lack of any specific regulations set by the FASB addressing cryptocurrency. And so the way they are not considered cash because they're not legal tender and are not backed by a government or other legal entity. So you cannot classify them on the balance sheet as cash or cash equivalent. And this is a big problem, as we'll talk about it now, when you take money out of your cash and cash equivalent and stuff it into what is being treated right now as an intangible asset. This creates a big concern for corporations. Okay, so let's look at the accounting treatment from the point of view of the balance sheet. So how do we present the cryptocurrency on the balance sheet? So we'll look at three different industries. So the first one is a company that is an industry like Tesla, and then we'll look at an investment firm, as an example, BlackRock, and then we'll look at a third type of companies, which is a mining firm, and the example here is Riot Blockchain. So each one of them will have a different way to present cryptocurrency on the balance sheet. So for a company like Tesla, because they are not in the business of investment or they're not in the business of mining of cryptocurrency, they will present it as an intangible asset. And that's being presented at historical cost, right? So they just record it as an intangible asset on the balance sheet. And this is kind of the problem today for companies moving cash from cash and cash equivalent or a current asset and going into an intangible asset and only recognizing gain, as we'll talk here in a minute, when they sell the asset. For an investment firm like BlackRock, they get to record it as an investment at cost and then market to market when there is a change in value. So there is a slightly more favorable treatment here when you are in the business, when your company's sole business is in the business of investment, right? Then if you're a mining firm like Riot Blockchain, right? So you get to record it as inventory because you are in the business of creating this item as inventory. and so you record it as inventory at the lower of cost or net realizable value. Right, so this is the presentation on the balance sheet, and it poses a problem for a company like Tesla when they move an asset from cash and cash equivalent to an intangible asset. Now, let's take a look at the accounting treatment from the perspective of the income statement. So, again, we'll look at an industry like Tesla, and then an investment firm like BlackRock, and a third type of company, the mining firm. So in terms of the accounting treatment on the income statement, when you have an intangible asset, you're a company like Tesla, then you don't get to record any gain or loss until you sell the asset. What you do is you perform an impairment test at the end of each accounting period to determine whether the value has gone down. You can record the loss, or actually you are required to record the loss, but not the gain. So this is a slightly unfair disadvantage here, is that the company will record losses, but will have to wait on the time they sell to record the gain from that cryptocurrency. So this is the problem today because of the lack of regulations by the FASB. Now, for an investment firm like the BlackRock, like in this example, you get to record it as an investment. It's a fair value accounting, and you get to record the gain or loss as you mark to market on your investment. And then we get a company like Riot Blockchain. The company will record it as an inventory on the balance sheet, and then record it obviously at the lower of cost and net realizable value, like you do with any kind of inventory. Record the loss, but not a gain. Gains are only recorded when you sell the asset at a profit. That's when you record the gain. So this is just like the three different treatments from a three different perspective of different companies, one in industry, one in investment, and one in the actual mining of the cryptocurrency. So what are the concerns? Why are companies reluctant to adopt cryptocurrency as a way to store value? Well, if you're looking at the current standard for cryptocurrency, you are replacing a current asset with a long-term asset. You're taking an asset out of cash and cash equivalent, and you're stuffing it into an intangible asset. And in this sense, you are reducing your cash and cash equivalent, and this is a bad look on the balance sheet, right? So you are having less current assets on the balance sheet. And then you can only record losses. So in a case like a company like Tesla, they're only recording a loss when the impairment test shows that the value of the asset is impaired, and they have to record the loss. And to record any kind of gain, they have to wait until they sell the asset. And that is a problem today, and that is because of the lack of regulations and standards set by the FASB around cryptocurrency. Now, let's take a look at the possible changes in the accounting for cryptocurrency going forward, which may propel the value of cryptocurrency much higher in 2022 and beyond. The FASB launched an agenda consultation in June of 2021. An agenda consultation is a way for the FASB to collect feedback from companies and accounting leaders on what are the topics that they should be discussing in the upcoming meeting. And this consultation is the first in 5 years, seeking the public's view on what is the long-term priorities that they should be focusing on. So depending on the feedback, the FASB could consider a new accounting project to take on. And what we're seeing is that companies, alongside other stakeholders such as investors, auditors, and academics, have all weighed in those priorities in letters to the FASB, which set the standards for public and private companies as well as nonprofits in the US. So here's an example letter from the DC Chamber of Commerce. Dear Mr. Jones and Ms. Sallow, and Mr. Jones here is the chair of the board on the FASB. Mr. Jones and Ms. Sallow is a senior advisor on the FASB board. We are writing in response to your invitation to comment on the FASB agenda. We urge the board to add a standard setting for digital assets and cryptocurrency on the near-term agenda. We are confident this letter provides adequate support for the pervasiveness of the issue, appropriate cost-beneficial solutions, and finally, with a clear and identifiable scope for the project. And there are so many other letters like this one. If you search online, you'll find like the CEO of a company like Square is also writing a letter to the FASB urging them to address the matter. Let's take a look at Cassie Wood, who is one of my favorite investors of all time, and her expectations for more specifically Bitcoin, both in general terms and also in relation to these possible changes in the accounting treatment. In an interview with Barron, Cassie talked about her price target of $500K for Bitcoin, and she said that the key from going from the current price in 2021 of $59K up all the way to $500K is the continued adoption by corporations such as Tesla, Square, and many others. And then she linked that adoption to the FASB rules that are coming down the pipe. Now, with all the letters being sent by company leaders to the FASB board requesting more detailed accounting standards, and with the rise of market cap of cryptocurrency, there is a good possibility that the FASB would meet these requests and set the ground rules for cryptocurrency accounting. Many expect these rules to move away from considering cryptocurrency as an intangible asset and more in a direction of a cash equivalent of some sort. And when that happens, you'll see tons of companies moving into cryptocurrency as a way to transact and store value in droves. So we'll keep a close eye and watching what the FASB does here in the upcoming meeting in December of 2021, and most likely we'll make an update video when that happens. So if you like this video, give it a big thumbs up, and I'll see you in the next video.